come a long way, in shared ownership in the last sort of 10, 15 years. Lenders are really keen to lend against this product. High street lenders, smaller lenders, they're fully behind shared ownership and they actually want to lend. It's a less risky product for them. And after all, when we look at the lenders, it's a business, so they really do want to lend. Regarding more manageable monthly repayments, I think I touched upon this before. Absolutely, you know exactly what your repayments are. You know what your mortgage repayment will be. You will know what your service charge element is, and you will know what the rent on the unsold equity is. At Argenta, we have a capped rate at 2.4%. The average is 2.75%, by the way. So you know exactly what you're paying each month. You're not at the mercy of a private landlord, where many of you will know, you don't know, are they going to hike it up by X amount when that next contract runs out? So your money management is far more efficient. You can get on the property ladder easily, and at Guinness Homes, the sales team will help and advise you and match you to the right product. And it is a home of your own. To decorate, run wild, you want to paint the walls orange and purple, you do that. It's your property. The caveat to that is you wouldn't be able to make structural changes unless you have the housing association's permission. And the reason that is because it could invalidate your warranty. But, you know, if you want to change something in the apartment that you're not happy with, the worktops, for example, you can do that. Homes can be sold at any time through our staircasing and resale department, and that's a really easy process. There are associated costs with that, no different from if you were paying an estate agent. We do everything we can to find you a buyer. You can staircase up to 100% as well. There are no restrictions at buying at Argenta. You're more than welcome, if your pocket allows you to staircase up to 100%. So there are a wealth of benefits if you're considering buying with shared ownership. Staircasing is a term that we use, and in essence, this is just the way of buying more shares to enable you to get from whatever your entry point is. Let's say, for example, you've bought your property on a 25% share. As Nick touched upon, he bought his property on a certain share and he remained there at 50%. You are at liberty to stay at the share that you want, that you've entered into. But if you want to staircase, i.e. you want to buy more chunks of shares to get you up to 100%, you can do that. Typically, many buyers buy shares in 10% at 10% sort of levies. Each time you want to buy more shares, you have to have a survey that's at your own cost. So that is a cost that you would bear yourself. But of course, the benefits to buying more shares is the more shares that you get, the rent is reduced until and if you get up to 100%, where, as I've said, your obligation to the housing association falls away. You own that property 100%. So you just have to continue with your mortgage payments and continue with your service charge. And I guess these are the three main points of shared ownership and eligibility. 90,000 combined income. So if you're buying with somebody else, no more than 90,000. As Nick touched upon, we, you know, as a forum, we are trying to get that changed, but we haven't made any progress on that, unfortunately, at the moment. So it's 90,000 combined household income for those of you that live in London or want to buy in London, 80,000 for outside of London. You can't own another property or part own another property at the time of completing your purchase. And just to explain that a little bit more, let's say, for example, you own a property, you've had a breakup, you're both going your separate ways, you've got less money to put down your deposit. If that house is, or that property is on the market and you've got a memorandum of sale, often referred to as an MOS, then we can proceed with your reservation. It is at the point of completion, when you complete on your new home that you must have completed on your former property. And then just to touch upon the age, 18 plus, a resident in the UK, and be able to obtain a mortgage.
But just add, there are some circumstances where if you're not able to obtain a mortgage, there can be cash purchases which are allowed, but that is very restricted circumstances that can be considered.
Yeah, and we do have cases like that where we do have cash buyers. And just to touch upon that a little bit more, that might be an age relevant purchase. For example, if somebody's more mature, shall we say, like me, where the opportunity to get a long term on the mortgage would apply, then if somebody has that capital, then we consider them as a cash case. But that is on a very much a case by case basis. So the buying journey with Guinness Homes, and generally with shared ownership, as soon as we receive, or as soon as we can, and we've received your inquiry, the sales team will make contact with you. And at this point, they will want to know a little bit about you. They'll want to know, because we're interested in you. We'll want to know, what you do for a living, what your income is, what your current circumstances are. Are you renting, privately renting? Are you a current homeowner that's got your property on the market? Are you living with family and friends, etc.? What your deposit looks like, how long you've worked for. So, it's just a general get to know you conversation. So you'll have a discussion with one of the sales team. And then at that point, when we've got that sort of the bones of your situation, we'll refer you over to Censeo, one of Anthony's team at Censeo. And at that point, they'll do a brief financial and eligibility check with you on what's called an HCA calculator. I'm not going to go into too much depth about that, and I'm not sure if Anthony will touch upon that later on. Now, providing everything looks good on that, then we will continue our conversation. You'll come in, you'll have a look at the homes that we've got. We'll listen to you carefully and what really suits you and what you're looking for. So perhaps, I don't know, perhaps you want to be on the ground floor. Perhaps in the case of Argenta, you want to be on the 5th floor. Perhaps you want to look over the garden. Perhaps you want to look over the dock. We will try to match you with what you want, with what aligns to your financial and eligibility check and what actually you can afford. So once you've chosen your property, the next thing is we'll go through the whole reservation process. And we really like to do this and guide you on a face-to-face basis. Now, we're all human, we're all busy. There are times when, although it's the biggest acquisition of your life, perhaps you can't get to see us, perhaps you can't get to see one of the team, and we'll do it online with you. But the thing that I really want to try to embed here is that we're really here to support you through this customer journey. We will have also spoken to you by the time you've come to reserve, about instructing a solicitor or a conveyancer. Now, all housing associations have panel solicitors or conveyancers that they use, and we would encourage people to try to use those solicitors or conveyancers. The reason being, we don't get anything from that in a financial sense whatsoever. However, the conveyancers and the solicitors that we have put on our panel have generally all been to the developments. They've had a look at it. Yesterday, I had a team of solicitors come and have a look at Argenta. They were blown away by it. They thought it was amazing. So they've seen the development. They've got the feel for the development. They've also read the legal pack, and they've also raised inquiries in advance. So therefore, because they've done their groundwork before, that will save time and money for you as a customer. It also gives us, although they're acting for you, it gives us at Guinness a better control. So if we can see that something is a little bit slow, we'll be on the phone and asking them, where are we, what's happening? And we also have a weekly meeting with them. So we can keep a really tight control of what's going on in order to support you through the process. In the background, once you have reserved, Anthony's team at Censeo will be putting in your application to the relevant lender. The lender will assess your application, and then because you've had an agreement in principle already, the next thing that will happen is they will instruct a surveyor to come out and have a look at the property that you have chosen, and to make sure that they're happy from a lending perspective for you and for them. 9 times out of 10, everything is all good and everybody's happy, and the offer will come out to you and to your solicitor. That's your opportunity to read through your offer, double check that you're happy with everything that's contained in the offer. You will work closely with your solicitor or your conveyancer at this point and discuss the legalities of it, etc. We will then, once you have signed your contract and your lease, by the way, we will look to exchange on notice or exchange on a fixed date. And what does this mean? With Argenta, we will look to exchange on a fixed date. The reason we will look to exchange on a fixed date is because the development, the properties are ready to move in now. You're not buying off plan, you're buying ready to move in now. So we will come to a mutually agreeable date that works for you and for us. And generally that's 14 days, and we will get you into exchange. Once we have exchanged with you, then you are legally bound into that contract, and then you will agree upon the date of completion. Now, that again is a mutually agreeable date that works around you in general. Once we've had notification that the transaction, your purchase, is completed, the exciting bit here, we will release the keys to you, and you can come and pick up your keys. You don't have to move in then. You move in when it's your property. You move in exactly when you want to. And in a nutshell, that's the buying journey. And I just really want to enforce and sort of stress here, we do appreciate at Guinness that, this is the biggest purchase of your life, no doubt about it. We are not an organisation that just does a reservation and then, cheerio type of thing. We are very used to, it sounds a bit cringy, but holding your hand all along that customer journey. And we're happy to do that because we've all been in this situation before and we understand it's a big thing.
It's probably just worth adding that from the initial assessment at Censeo, we would have made contact about the finances. And if we do mortgage for you as well, we would have been actually with you in that journey, essentially right from the beginning up until completion as well, because we will allocate you a case manager who will be responsible of looking after you all the way until completion till you get the keys, and that will be your point of contact throughout.
Yeah, I think that's a really interesting point, Anthony, because absolutely it's really important that you've got that case manager, and thank you for adding that in. That's an important point to make. I think there's nothing worse, is there? And we've all been in that situation in our lives outside of buying a property where you're just passed from pillar to post and you don't know who you're dealing with, but you have an assigned broker at Censeo and you have a very experienced sales team at Guinness that will support you through that process. We are designed to be more affordable, and we've got and we've always had a £99 reservation fee, which means, what can you buy for £99 now? Not a lot. So it's a £99 reservation fee to secure your property. Conveyance cost and solicitors cost vary, as you will know, but our panel solicitors and panel conveyancers average between £1,500 and £2,000. Don't be tempted, please. One piece of advice: by really cheap solicitors or conveyancers, you'll often find that that glaring price, very, very cheap point, in actuality at the end doesn't add up to that. The costs can really ramp up. So really be cautious about that. And one piece of advice, as I said, if you are coming to us or indeed another housing association, please really consider the panel solicitors and conveyancers carefully, because we've worked with many of them for many years, and they understand shared ownership. Some conveyancers say we understand it, and they don't really. Or once again, you haven't got a case manager. You're passed from pillar to post. It's almost like you're on a conveyor belt. And that is really annoying. The last point, the moving fees, well, many first-time buyers, to be honest, don't have a huge amount of furniture. So if you're not going to do it yourself in a friend's car or friend's van, don't forget to keep that little pot of money aside to get you moved into your new property and your new home.
I'll just jump in very quickly as well on that point, is that we call it having the right team in place, because you've got specialists like ourselves that look after the mortgages in Censeo. We understand shared ownership, and that goes exactly the same with the solicitors. So your team of your broker and your solicitor are really, really important, and having that right team to guide you through, especially if you're a first time buyer and haven't done it before, I think is invaluable. So not just because we are specialists do I say, you have to use Censeo. If you don't use Censeo, at least use another specialist broker. Likewise, if you don't use the panel solicitor, if you buy at Argenta, make sure you do use a specialist, because you want a team that understand shared ownership back to front. I think this is right my cue to talk about the finance breakdown, isn't it, Helen?
It is.
So we give a quick example here of a property of £300,000. And if you buy a 25% share, that's 75,000. Now, you can get shared ownership with a deposit as small as 5%. So on your 75,000, that would be £3,750, which is a lot more achievable to save than if you were buying on the open market and you needed to put down a £15,000 deposit. The mortgage, 71,250, 95% of your 75,000. Again, a lot more achievable on standard incomes than if you're looking at having to get a mortgage for that full 100%. So shared ownership does make it a lot more viable and affordable. People, that was one of the questions. I can't remember the percentage, Nick, but it definitely is 100% more affordable than buying on the open market. I'm not going to say it's better than buying on the open market, because it's not for everyone. If you can afford to buy on the open market, then of course that is an option that you should explore. However, if you're not in a position to have 30,000 or 15K as a deposit, or you haven't got the income required to go on the open market, shared ownership definitely is something that you should be considering. Now, you do pay rent, as Helen mentioned, and the service charge, and those are going to be specific in terms of each development that you look at. Now, you will need some documentation. So our financial assessment that we do at the beginning, that customer journey that you saw, that initial assessment is based on the information that you provide. So you will not have to provide any documentation at that point. You'll get a link which will take you onto a portal where you fill out all your information, and you will then confirm to us what you earn, what credit commitments you have, and so forth. We will then do that initial assessment and confirm that you are eligible and affordable to move forward to your viewing. Once you've done that and you've decided on a plot, we will then ask you to log back into the portal and upload some documents ready for what we call a full financial interview and a sign-off. Okay. These documents are going to be things that you should have. So proof of ID, so a valid passport or UK driving license, bank statements for the last 3 months, showing your salary credit. If you are self-employed and you're running a limited company, we would like to see the last 3 months business accounts. If you're a sole trader and your salary is going into a current account, likewise, you can present standard accounts for those as well. If you're on a visa, one of the myths that wasn't there actually is that, can you get a mortgage if you're on a visa? The answer is yes. You can buy shared ownership on a visa and you can obtain a mortgage. So what we would ask is for a copy of your visa. If you're an EU national and you've got settled status, we would want a copy of the settled code to be uploaded to us. Income obviously is very important, so you need to evidence the income that you've declared. So if you are employed, it's the last 3 months pay slips. If you're weekly paid, then it's the last 13 weeks. For those who are self-employed as a sole trader, we're looking for up to the last 3 years SA 302s and tax overviews, which you can download from the HMRC gateway, or your accountant can provide them for you. If you're limited, then we also would like to see your individual SA 302 and tax overviews or company accounts. You do need to also provide proof of address, and that can be in the form of a utility bill, council tax statement or a bank statement. However, it has to be dated in the last 3 months. Source of funds will also need to be checked and approved. So that's your deposit. So how much deposit you're putting down, whether or not it's 5%, 10%, or if you've got more, we do need to see where that money's come from. You are allowed to have gifts. So gifts can come from friends and family. Most banks and building societies prefer if the gift is coming from immediate family, and they would also need to provide evidence of where that money's coming from and supply you with a letter confirming that they are gifting you the money and it's not to be repaid. A credit report is going to be needed. There are various different credit report agencies, the likes of Experian and Equifax and Check My File, that can be used to obtain your report. What I would suggest that you start looking at your report as early as now. I wouldn't wait until you need it, because if there is anything on there that you're not sure of, or if you've had any missed payments or any adverse credit, it's best to know and get it sorted out before you apply, and be able to explain to us what the circumstances are, and then we'll be able to advise how we can help. Limited companies, as I mentioned, certified accounts. So there are some legals that need to take place. We mentioned that the solicitor will need to be instructed. We work closely with a panel of solicitors, as Helen mentioned earlier, at Guinness as well. You need to get a trusted solicitor, which has been mentioned. They'll act on your behalf. So their job, they don't act for the broker, ourselves at Censeo. They don't act for Guinness. You instruct them, you'll be paying them, and they'll be acting for you. So I know one of the things that I know some solicitors say, there are no such things as silly questions. So you need to ask all your questions about what you can do, what your rights are, what the legalities are of shared ownership, what the lease says that you can and can't do, what your service charge entails. They'll be able to answer all of that information for you. And Helen mentioned inquiries earlier. If they don't know the answer or they're unsure of something, they will raise that with Guinness solicitors, and they will not proceed and allow you to complete until they were satisfied with the answers that they've had back, because they are representing you. So their job is to cover all the legal areas of the purchase, making sure that they do all of the checks. They also act for the bank as well. So they will also, if the bank have got any queries or any questions about the lease or the development, they will request the information from the solicitor, and they are likewise duty bound to respond to the lender. They'll also handle your exchange of contracts. So they will, in some instance, will sign for you. You'll give them authorization to do that. They'll also receive the funds from the lender and transfer that across to their Guinness solicitors as well.
Thanks, Anthony. So just coming back to what we do at Guinness Homes, and particularly with the sales team, we're here to help you, as I've mentioned before, from the beginning to the end of your purchase. We want you to understand shared ownership, and as Anthony said, there's no question that's a silly question, and there's lots of myths around regarding shared ownership. So we want you to understand shared ownership, and we're more than happy for you to come in and have a chat with us. We want you to get the right property. So we'll listen to what it is that you want. As I've touched upon previously, is it a 1 bed? Is it a 2 bed? Do you have a particular desire for a floor, an aspect, a view? We'll really do listen to you and try to match you to the property that you want. We are not financial advisors. So although we involve ourselves heavily with Censeo, and obviously we see all the paperwork that is associated with that, we are not financial advisors. So we do have to have an understanding of your affordability and to help you understand the affordability process as well. We can answer any questions about the development and indeed guide you through the whole process, as I've mentioned before. And we are there, and I like to think we're your critical friend, and I don't want to sound too cliched in that, but we really are here to help you find your home so that your home ownership journey is an enjoyable one and as stress-free as possible. Okay, on to Argenta. So just looking at this slide here, just to give you a brief overview of some of the pictures or CGIs that you can see. The ones on the left are predominantly our show apartments. The one in the middle, this is our residence garden. This is a private residence garden for the first owners in this very large development that I'll be talking about shortly. The kitchens that you can see, this is an actual photograph. We've really considered every single aspect, as far as we can go. What is it that we know that our buyers like in our homes? What is it that you would really want, or we think you'd want? And we really try to give you the best specification possible. The bottom right-hand picture is an actual CGI, although it's all built now, as I've said, of Argenta. This is a view taken from the North Woolwich Road. And you'll see on the bottom, there's a commercial unit. We are in discussions with a very nice coffee shop. So, going down for your latte in the morning will hopefully be something that you can do very shortly. Whilst Nick's just showing this fly through, I'm just going to give a brief overview of Argenta. So I'll just carry on, but please, this is Argenta as you can see it. This is the whole block. This is the view from the second floor upwards, actually. You can see Canary Wharf, you can see the cable cars. You can see it's really interesting, the view, because you've got different layers of housing as you go through. So you've got sort of that post-war directly behind you, and then you've got 70s development running through, and then of course you see the skyline of Canary Wharf, etc. But Argenta is Guinness's latest offering to East London. It's in Royal Docks, as we've mentioned, Silvertown, in the borough of Newham. It is an iconic East London neighbourhood. It's a place with a bold personality, and it is founded in industrial heritage. It has a dockside location, and it's somewhere that we can celebrate East London's pioneering past and brighter than ever future. It's a really exciting place to be. We've called it Argenta, and some people say, well, what's that mean? Argenta actually means silver or silvery, and it's derived from Latin. And we really wanted to tie that in with Silvertown. The master plan is really exciting. It's approximately 7,000 homes, and that will be over 25 hectares of land. And we'll be developing there over the next 10 years or so. So it's a really great time to buy. It will have many commercial opportunities as the development matures, and it will have amenities that the whole of this new community can enjoy. We've just released 34 shared ownership properties 2 weeks ago, 1 and 2 bedrooms. All of them have got generous layouts, all with their own balcony. The balconies are really great size, by the way. And this particular block has got their own fobbed residence garden, which is really very pretty. It's got a little amphitheatre there. So, if you're an aspiring singer and actor, get yourself out there. It's got, a really fascinating slide. It's got planting opportunities. So if you want to plant some produce, some flowers, some vegetables, plant away. One bed start from 390,000. That's the full market value. And they are available on a 25% share, which is approximately 97,500. The 2 bedrooms start from 530,000. That's the full market value once again. And on a 25% share purchase, that's 132,500. It's really well positioned. It's juxtaposed between West Silvertown and Pontoon Dock, both only a 2-minute walk away. So you can get into Canning Town within 2 stops, Canary Wharf within about 20 minutes, and obviously from there on, offering brilliant links to London. We are 10 minutes walk from City Airport. So if you fancy that weekend breakaway, it's right there on your doorstep. Or indeed, if you've got business meeting abroad, then that's very convenient as well. Key takeaways for Argenta is it's ready to move in now. We're not off plan. You're not waiting. If you want to be in by March, we can make that happen, okay? There are high quality, specification is beautiful. Everybody that's been reserved, visited, is really impressed by the specification. We've chosen high quality handleless kitchens in cashmere by a kitchen design company called Rock. We've chosen Bosch appliances throughout all of the apartments. We've got underfloor heating, so that's saving valuable wall space. We've got floor to ceiling windows, so real light rooms, nothing murky or dark. We've got floor to ceiling tiling in the bathrooms, and most of the 2 beds have got an ensuite to enjoy. We've got a 998-year lease, so a lovely long lease there. We've got an efficient energy efficiency, and we're hitting A/B at the moment. As somebody that lives in a 1930s house, I can tell you, when I walk in there, it feels just luxurious. As I've mentioned, we've got a private residence garden, which is fob accessed only. And I think that wraps it up. I could carry on talking, but they're the main key highlights.
Thanks, Helen. I was just going to say, yeah, on the screen at the moment, maybe Anthony will be able to talk us through this, but here's a bit of a breakdown of one of the homes available at Argenta.
Yeah, just the numbers here. So based on the 2-bedroom here, valued at 530, the 25% share is 132.5. Now, your 5% deposit is just over 6,500 at 6,625. Now, the mortgage payments, if we looked at that over a 30-year term, and this is just on a generic rate of 4.5%, you're looking at just under £640. Now, rent is 795, and that's based at 2.4%, and then you've got service charge of 324. Now, monthly, that's 1757. So I know a lot of people on this webinar are probably renting and probably paying more or very close to this amount for rental, where you can own a 25% share with just this 5% deposit. Now, this is obviously subject to that initial assessment because this isn't going to be for everybody. Some people won't be able to get a 30-year mortgage, for example. Some people will need a longer mortgage and can get a longer mortgage. Likewise, if you've got a bigger deposit than a 5%, that will bring your mortgage payments down as well. So this is just an example of what it can look like to show that you are able to you can buy in this location for very similar, if not less, to what you'll be doing in rent.
Also, Anthony, I think, if you look at that 5% deposit, 6,625, if you were saving to buy this similar sort of unit on the open market as an outright sale property, I mean, what sort of deposit are they likely to be looking at for that?
So let's say you were looking at 10% on the open market. That's £53,000. Now, there are some lenders on the open market that would allow you to do a 5% deposit, but then you're going to need the income to allow you to borrow, 95% of 530,000, which in most cases people are not going to have that income because in most cases 4.5 to 5 times what you can actually borrow. So the deposit is chalk and cheese, isn't it? They're significantly different. Most people are not going to have access to a deposit of £53,000 that they can save quickly, whereas Bank of Mum and Dad are actually one of the best lenders in the UK at the moment. So Bank of Mum and Dad can give you £5,000 towards a deposit. You're almost there with a 5% deposit here.
Yeah. Thanks, guys. So next up, we've got a video from somebody who's living in one of Guinness's properties. I'm aware that, sharing a video over Zoom isn't always the best experience, so we'll give it a go for a few minutes. Anthony and Helen, please feel free to give me a nudge if you think it is looking a bit pixelated or doesn't sound great. But we'll play it for a couple of minutes. Give Helen and Anthony a chance to have a little sip of water, and then we'll fire lots of questions at them for the Q&A.
My name's Daniel. I'm 26 years old. I currently work in the charity sector as a QA tester, and I'm a first-time buyer. So prior to living here, I was living in Ealing, just down the road. I was there for a couple of years living with a friend. And then when our tenancy came to an end at the start of March, just kind of looking to see what the next steps were. Didn't really want to commit to like another year of renting, especially at the moment, kind of the current climate. So it made sense to kind of look to see what other options were out there. Shared ownership was one of those options. And sort of, I came to the 100 and went from there, really. So the process of actually purchasing the home was really quick. So I first came to view this one in January, sort of mid-January. Kind of fell in love with it straight away. Came back a week later for another viewing, and then by the end of March, I had completed, sort of signed all the contracts and everything, and then moved in the first week of April. So it was a really quick turnaround, and actually the process from Guinness was really helpful me. I was kind of speed that along and just made everything a lot easier. I think what stood out about this was just the initial feeling and reaction that I had when I first saw it. So I had seen other sort of developments in different areas of London, but the feeling I had kind of when I first came up the road and kind of saw the building, had a look around, like viewed onto the canal, kind of general feel of the area, just really stood out to me. I was kind of looking for somewhere that was a little bit quieter, not as necessarily busy, and actually had kind of this place, sort of waking up in the morning to the canal and people just walking up and down, just really peaceful and really relaxing. Just kind of really stood out to me. And I could see myself here, which I obviously think is really important. I think my home is really airy, it's really bright. There's a lot of natural light, kind of the floor to ceiling windows just make it really stand out as soon as you walk in the room. You're just filled with light. The flat that I'm in faces, so you get the evening sun. So kind of in the afternoon, it gets to 4 or 5 o'clock and the sun's just starting to set. Kind of fills the room with sun, which is just really nice. And also just having the appliances already installed just made everything a lot easier. You know, having sort of a washing machine, oven, fridge already installed just meant that as soon as I came in, I could get started straight away. I wasn't kind of having to wait for anything before I moved in. Having outdoor space, especially in London, can be kind of at a premium. So the one I've got here, like kind of looking over the canal, I've got room to kind of have a couple of nice chairs, a little table outside. That was ended up being like a non-negotiable, something that I must have, especially this time of year in the summer. It's really nice to kind of just sit out there of an evening with like a book or like just sort of soaking everything in, soaking in the sun. Housing market at the moment is so difficult to get onto. So I was always kind of looking for different schemes and different things that are available. Shared ownership was the one that then kind of stood out. And then once I kind of came to view the 100, it kind of just confirmed that that was the right thing for me to do. I opted for a shared ownership scheme because I've been renting sort of for the last 5 or 6 years, but also just having that kind of security of knowing that I'm here for as long as I want to be here. I kind of have a bit more freedom to decorate, to make the home how I want it. The one thing I would tell people when they're looking to buy a shared ownership home is just to make sure that you do your research.
That was really nice to hear from that buyer, and yeah, you can kind of see the quality of the sort of developments that Guinness put up in that video as well. So we're on to the questions, and we've had a lot. Helen and Anthony, microphones on, please. We'll go through some of the questions. So maybe one for you, Anthony. Are there any minimum income requirements? For example, if you earn under 30,000, would you be eligible in London?
It is subject to the size of your deposit. So the affordability generally works that we're looking for mortgage, rent, and the service charge to be approximately 40 to 45% of your net monthly take-home pay. So, but dependent on the size of your deposit is going to determine the amount of your mortgage. So, yes, there will be sort of guidance in terms of minimum incomes that can be provided that sometimes are on shared ownership, but they're just for guidance. It's individual circumstances that we look at. But as a rule of thumb, if you look at anything between 40 and 45%, the monthly costs of your net income, that should tell you roughly where you are.
Thank you. And you've got an affordability calculator on your website, haven't you? We've got one on ours as well. So yeah, you can play around with affordability calculators to kind of get an idea of what might be a realistic amount for you to be able to put towards a shared ownership property. Anthony, I think you want to answer this one. The next one being another eligibility seems to be you must have a local connection to the area you are purchasing as set out by the local authority. So you are then only limited to resales. So I suppose this is one that could have been in the truth or myth section. So do you want to address this one, please, Anthony?
No, is the actual answer. It's not necessarily the case. On some developments, there will be restrictions that are put in place, and these are typically for a period of time. It might be for the first 6 months, might be for the first 3 months, and then they fall away. But generally speaking, it is dependent on the development. At this development at Argenta, there aren't any restrictions in terms of live or work, so you can apply wherever you are from the UK, essentially.
Thank you very much. Helen, is the rent that you need to pay fixed or can it increase?
Yeah, the rent can increase on a yearly basis. It's reviewed every year, but it's 0.5% RPI. So, as opposed to a private rent, then that's a lot different. I will just say at Argenta, we have fixed the rent at 2.4%. So in the case of Argenta, the rent will not be raised.
Thank you very much. Do I pay full stamp duty for a shared ownership home?
No, is the answer to that, in the sense of it's optional. So it's not compulsory to pay full stamp duty, but you do have multiple options with shared ownership, which is different to buying on the open market. The solicitor will provide what the options are to you. One of them is to elect to pay the full stamp duty on the full market value, or just to pay any stamp duty on the actual share. So it's best to speak to the solicitor and they will break down the options. But the answer to the question is no, you don't have to pay full stamp duty, but it is something that you can do if you wanted to.
Okay, thank you very much. And second part of this question is, do you have to pay the full service charge, or is the service charge based on the share that you have purchased?
It's the full service charge. It's not broken down based on share. But that is a good question, something that has come up a few times over the years. But the share is what you own, but you can't break down your usage of the lift, for example. So
Yeah,
that's why you pay 100% of the service charge, even though you only own 25% of the property.
exactly. Yeah. Thank you. Lots of financial questions. So another one for you, Anthony. Can you use a LISA, so a lifetime ISA for shared ownership?
You can. The only caveat and something just to be mindful of is that there is a property full market value of 450,000 as a cap to use the LISA to get the bonus. So if you exceed 450,000, you won't qualify for the bonus. So you can use it, but the property value has to be under 450.
Thank you. One for you, Helen. When you buy a flat, excuse me, can the overall value fall when you sell it, or will it stay the same, or will it go up? Have you got a crystal ball for that one?
I wish I had a crystal ball. It can go up and down. It's market dependent. So it's no different from if you were buying an outright sale property from an estate agent. It's determined by the market. I mean, I've seen some really successful stories over the many years that we've all been doing this, where people have gone into an area which has really the capital value of the properties have really raised because perhaps it was an area that wasn't very popular at the time or hadn't reached its full potential. So many people have done quite well out of shared ownership, but it can go up or down like any property.
Down, yeah, exactly.
Yeah, it's subject to market conditions, like the open market.
Yeah. And how, if there's a property and there's multiple people applying to live in that property, Helen, how is that actually chosen? How are successful applicants chosen?
Yeah, so Guinness work on a first come, first served basis. So it's basically, that doesn't mean the first person that registers. It means the first person that's come along and has had their assessment and their full broker sign off and is proceedable.
Yeah, thank you very much. If one buys a share of 50% and you want to buy more shares, what's the process, and do you have to apply for a mortgage all over again? So the process is staircasing. That was covered in the presentation. So hopefully that was answered as we were going along. But yes, you do need to. Do you want to talk about the mortgage side of it, Anthony, before I say anything that's incorrect?
Yeah. So essentially, the answer to the question is you don't necessarily have to apply for a mortgage. If you've got cash to buy an additional 10%, then you can do it in cash. If you want to take out a mortgage for the additional share, that is also possible. It's probably best to speak to your existing broker, who will be able to have obviously information about your current mortgage, and they'll be able to advise what borrowing is available for you to buy more shares. It's part of what we do as part of our remortgage service. So anyone who becomes a part of Club Censeo, we automatically will review their mortgage and look at their staycation options for them on an annual basis.
Brilliant. Thank you very much. Okay, we're going to do a couple more, hopefully, and then we'll give the guys a break. So, I'm a 45-year-old woman and my partner is 50. Between us, we earn around about 85,000 to 90,000. Due to cost of living and rental prices, we have always struggled to save for a regular mortgage, and this may be our only way to get onto the property ladder. Are we too old, and do we earn too much?
No and no.
Brilliant answer.
Very simple answer.
Yeah.
Get applying.
Yeah, thank you. You've said you're earning between 85 and 90,000. Obviously, if you're looking for a property outside of London, the income cap is 80,000. But if you're on this webinar because you want to live in London, then the cap is up to 90,000. So thank you.
Argenta is what I was talking about with regards to applying.
Yeah, brilliant.
Yeah, absolutely.
Okay, last one. I'm going to try and pick a really good one. Here we go. If I'm selling my share at 25%, can a buyer purchase it at 100%?
Yes, is the answer. They will have to be able to afford it as well, but that is a possibility.
Yeah, thank you. So we're gonna wrap up there. Thanks for. I know there's loads and loads of questions that we didn't get to answer. I will be sharing them with Helen and Anthony after this session. And it may be that they can try and answer a few when we send out the slides later as well. On the screen there as well, hopefully you can see the email for Silvertown. So by all means, if you have particular questions that weren't answered in the session today, fire them over to the silvertown@guinness.org.uk address. And if you want more information about that development or anything that Guinness have got available at the moment, then you can visit Guinness Homes /Silvertown. Is that Guinness Homes? .com.org.uk
.org.uk.
Guinnesshomes.org.uk /Silvertown, or just .org.uk if you want to see everything that Guinness have got available. Just a quick one, Helen, have you got other developments available around London at the moment?
We've sold out, Nick.
Okay, there you go. Oh, well, there you go.
Yeah, we don't have anything immediately available in zone sort of 2, 3, 4 at the moment. But you can find anything that we might have. I think we've got something over in sort of northwest London. Go onto our website, have a look, see what properties are available. But sort of my developments we've sold out on. Shared ownership is increasingly popular. It's a great option. The lady that cited the question earlier on, that posed the question earlier on, would love to see you. We've got a Valentine's event on the 7th of February. So please contact us on any of those ways that Nick's got on the screen now. Come and have a chat and be delighted to see any of you.
Brilliant. Thank you very much. Anthony, any closing thoughts?
Like I said, get your affordability assessment done. If you're unsure whether or not you can or can't do it, if you go onto our website, which is www.censeo-financial.com, go to assessment, and you'll find the development there. If you go under Guinness, Argenta, you can then do an affordability assessment, and we'll be able to tell you whether or not you're affordable and what level of share you can buy. So
thanks everybody for joining the webinar today. Keep your eyes peeled on sharetobuy.com for other events that we've got coming up, and Share to Buy Live is the name of our events brand. So just a couple of things coming up over the next couple of months. In February, maybe not for this audience, but we've got one of our home buyer days in Exeter. In March, we're going to have an online expert day where you can book an appointment with a conveyancer or solicitor to put any of your questions to them. And then in April, we've got our flagship London Home Show event at the QE2 Centre in Westminster, which is a free event for you guys to come along to. So if you haven't already, register with sharetobuy.com to be kept in the loop about everything that we've got going on. And yeah, thank you very much to Anthony, thanks to Helen, and thanks to everybody who joined the webinar today. All the best. Bye-bye.
Thank you. Bye-bye.
Take care. Bye-bye.